Pat Walker here with Mission Winners. It is Sunday and once again time to dive into the ETFs and MAXLIST stocks. You can see that nice weekly base here and you can see it here, but you can say, gosh, I see these tops over here. This is a great tactic. You can adjust your scope size on your charting software. And then you can see the setup better right here. Weekly on the left, daily on the right. I do that periodically just to show people and to show you tactics that will help you make better investing decisions. I mean, you look at this and you can say, well, I see that base there, but oh, what about here? Again, adjust it. There you go. This is a powerful template. Weekly on the left, daily on the right. What do you see here? ARK Innovation, ARKK. Nice simple base right here. You could punch up ARKK and see if there's any stocks in that group that could be potentially bought. Why? Because stocks make up the ETFs. Also note this. Say it again. That's a clean and simple base right there, folks. What do we want to see? Take out that line with volume. What's one slight negative? And this is the stuff we teach. Right here, this bar, it closed near the lows of the day on a pickup in volume. We need to see it take out this this line right here with volume. Now you have a setup. There we go. ARKK. Let's move on. ARKW. This one's a little bit extended, but it does tell us, look at the weekly. This is an ETF that's in a leadership position. Leading groups, leading stocks. Perhaps you could look at some of the leading stocks in ARKW and find an opportunity. Systemization, that's what we do. You got to remember this. We got a limited amount of money and a limited amount of time, and we use both assets wisely. Let's move on. But it is in a leadership position, okay? Let's continue onward. Biotechnology, look at that. Is that in a leadership position? No, it's not. What do we do? Move on. Wait, maybe it's going to turn. I don't play the maybe game here. There's no power there. Look for power. Nothing there. Move on. Let's just go to the next one. Cloud computing's got some power in here. It's a little bit choppy through here, okay? What's it need to do? Take out this line right here, which coincides with the line right there, and it needs to do it with volume. We always analyze at Mission Winners charts and volume. Oh, that's a green bar. That's a good bar. I'd like to show you a great lesson, folks. And I taught this at IBD meetups for years. Oh, it's a green bar on good volume. That's good. Look where it opened. Look where it ran up to. Look where it closed. It closed near the lows. Folks, this green bar is not representing buying. It's representing selling. And that's good to know. It's like, well, for right now, I kind of think I'll stay away from cloud computing until it shows some power. There you go. There's a good lesson for everybody. Let's move. This is fun, isn't it? On a Saturday? Gee whiz. Here we go. Energy, kind of lagging there. Be careful with it. Weekly and daily, no power, leave it alone. Beware energy. Dow Jones Internet. I like the tops across here. I like the tops for the weekly chart here. Daily needs to take out the top here. One key point. Yesterday, on Friday, it rallied up and it closed down below where it opened. It's met with selling. So it has to take out this line, and I'll draw this to help you. Hold on just a second. And I hope you all have a good weekend. Here we go. It needs to take out these tops with volume. Until then, not a lot of power. Be careful. Move on. Here we go. IBD 50 is kind of choppy here. Not a lot of leadership in it. Tells us to be a little careful with IBD 50 stocks. Not all of them, but overall, it's powering here some, but it's pausing here, right here. Down on heavy volume, although it didn't close too bad. Down on a pickup in volume. Reversal bar here on a pickup in volume. Just tells us IBD 50 stocks, the IBD 50 index, there's a little bit of distribution occurring at this time. That's all. Move on. Gold miners was acting okay. And then they spanked it here pretty hard on volume. This is a loose pattern now, folks. Loose patterns indicate high investor emotions. It just tells you at this time, be a little cautious with gold miners. That's all. Junior gold miners, it's a little bit better, but you know, it's trending up, but it's pulled back. What do we need to see? We need to see GDXJ bounce off this line with volume. Until then, be careful. Gold. Now, gold doesn't look too bad. Note the clean and simple base here. Watch this. You'll love this. Clean and simple base here. Clean and simple base here. Clean and simple base here on the daily charts. And yes, We bought this several times and we own it and it's working. Now, is there anything to do with it now? No. I need to stress something. I don't do these things, these videos to brag. Oh, that's nauseating. I do it to educate on what to look for. Simple base breakouts and ride trends. Look at the trend on the weekly, folks. By the way, that's the 8 EMA moving average, the yellow line. 8 EMA weekly. Could be the 10. You could do the 10 also, but we just transpose it both on there. And it's the 8 EMA on the daily. But look at the trend. There you go. Tells you, ride trends, makes life easier. No real clean entry on it now, so let's move on. Here we go. Cybersecurity's started to lift up, then gave it back. Kind of choppy here. Green bar, but look at where it closed. It closed near the lows. Tells us they're selling. Be a little careful with cybersecurity. Move on. Biotechnology, nothing. Another biotech ETF, right? There's nothing there. Stay away from biotech. We don't have to overthink it. Nothing there. Continue onwards. Online retail's basing here a little bit. I'll tighten this chart up just a bit so we can see a bit more. There we go. You can see it's basing, but not a lot of power there, not a lot of conviction. Be a little careful with online retail at this point in time. So, software's not acting too bad. Okay, IGV, expanded software. You could punch up IGV and see what the top holdings are. And it's acting okay, but it tailed off here a bit. It's a little choppy. It's not clean and simple. It was clean and simple back here, but a little choppier. No real cleanup entry on it at this point in time, but it is trending up. Medicine, well, they need a shot, don't they? Look at that. That baby took off and then they gave it right back. What does that tell you? No conviction with medical stocks. Be aware of that. Mid-cap, chopping around. Ran up, faded. Same thing on the daily. And it needs to show strength. Until it does, be careful with mid-cap stocks. Done. Aerospace defense, they're not flying at this point in time. Leave it alone. Done. Home construction, stay away. By the way, when I'm doing that, I'm not doing that to be cute and funny. I'm just pointing it out. Look, it goes up, it drops down on heavy volume. It's below the 50-day. Stay away from the home builders. Done. S&P 500 growth. Now, that one doesn't look too bad, does it? You look at the weekly trending up, you look at the daily. What does that tell you? Oh, maybe I should look into some growth stocks. Isn't that neat to know what to look into further and things to avoid? Systemization, love it. Small caps kind of lagging there. Be careful with small cap. Real estate is lagging. Be careful with real estate. Transportation, there's no real power of the weekly or the daily. Be careful with transportation stocks. I'd avoid them for now. Airlines don't look too bad. Look at that weekly base breakout right there with volume. And here's the daily. And it had a nice move. Not a massive move, but it's a start. But here's an important point. Look at the simple base. And it lifted off right here, not on much volume, but then it started to pick up on volume. There you go. Is there anything to do with it now? No. But note the simple weekly base, note the simple daily base. There we go. Banks started to lift up. They took it right back. You can see it on the weekly, and you can see it on the daily. All right. When they go up and then they fall right back down on a pickup in volume, be careful. Be careful with that, okay? Look for strength, continuous strength. Insurance, there's nothing there. Leave it alone. I mean, look at it dropping here. Nothing. Stay away from insurance. Another banking sector, regional banks, KRE, it's chopping around a little bit, but note, fell on fairly heavy volume here, fell on fairly heavy volume there. Some distribution there. Just be careful with that. Let's move on. Mid-cap, it's hanging in okay, but note, there is a little distribution coming in here, okay, when it started to lose. Right in here, approached the 21 EMA, then it fell through the next day. Little choppy. It needs to show some strength. Until then, be careful with mid-cap stocks. Isn't that good to know? Again, that's why we do this in Mission Winners. Things to look into, things to avoid. Opposite sides of the same coin. Helps us. I think that's a good analogy, the same coin, especially in the investing realm. Just a thought. You got to have fun too. Home builders. Another home builder ETF. Stay away. Stay away from the home builders. Oil services, stay away from oil services. Done. Pharmaceuticals, they need drugs. My kids would just shake their heads and go, boy, there he goes. Okay, just dropping down here, okay? There's nothing there. My grandkids would probably do that. But anyway, just kind of dropping here. There's nothing to do with pharmaceuticals. Stay away. Stay away from that group. NASDAQ 100 doesn't look too bad here on the weekly or the daily. Notice what it did. It ran up and then it faded Friday and closed in the bottom third of its range. Not a lot of power until this starts to take out these tops here. And I'll draw a line to help you. There you go. Needs to take that out. And it's just a simple flat line, folks. Take that out with volume. Till then, just be a little cautious when NASDAQ, the big NASDAQ stocks. That's all. And that can change Monday. Here's the non-leveraged one. QQQ, same situation, tailed off. Retailing, stay away. There's no power in there. Cloud computing, picking up a little bit, but it also tailed off on Friday. You notice how many times I've said that? It tells us there was a lack of buying conviction into the end of the week. Maybe it'll turn and go up on Monday and Tuesday. We don't know, but at this point in time, that's what's happening. Move on here. Silver's hanging in there, okay? Lifting across this top. There's a little distribution here, but it doesn't look too bad, does it? Up the rising, see that moving average? That's the 8 EMA. Circle back to it. The yellow line is the 8 EMA. The blue line is the 21 EMA. And the green line is the 50-day simple. There's a lot of work in that template, by the way. There's years of study. That 8 EMA, you wouldn't believe the amount of research I did with a good buddy of mine, my brother from another mother out in California. There he is. That's what we look for. Steel, kind of sloppy here. Be careful with steel. SMH, looking a little bit better, but note, it fell on fairly heavy volume here. You have a tail bar here. Look at that. It gapped up and fell. It runs up and closed near the lows. It's met with selling. We need to see some power in SMH. We need to see it lifting up with volume. Until then, just be a little cautious with semiconductor stocks and SMH. Same thing's true with SOXL. Spiders goes up and then comes down, reverses down. A couple of red bars here that aren't too bad. And then on Friday, it runs up and reverses and closes in the bottom third of its range. It tells us there's a seller up, there's sellers up there. It's not a conspiracy theory, but we need to see some up power that continues on the S&P 500, on the spiders and the markets. Same thing's true with SSO. Count it down. Solar, stay away. There's nothing there. Just, by the way, when I do that, I'm not trying to be cute or funny. I'm just trying to point out it's right in front of us. It's in a downtrend. It's below the moving averages. Leave it alone for now. Buy strength. Don't bottom fish. It will help you. It will save you a lot of pain and heartache too. Okay. Small caps still kind of choppy here. I mean, look at the weekly. It goes up. They take it right back down. And you can see it here. Formed a little pennant and then it fell right out of it. I'll draw that some of, just for education purposes. This is a pennant formation, and it fell out of it right here on a pickup in volume. Just a little chart reading exercise for you, just to share with you. Just a simple pattern. At this time, it says leave it alone. That's all. Oil's kind of choppy here. U.S. oil, be careful with that. Aerospace and defense, some selling in here. Be a little cautious with that. Biotechnology, stay away. Just look there. There's nothing there. Leave it alone. And by the way, I'll say this again. I don't do that to be funny, like, oh, look at that. No, if it's not there, if you can't see it, if you have to really look for it, that means it's going to be hard for you to see it. It's going to be hard for other people to see a pattern. That decreases the potential they'll buy, right? We want to key on patterns, and at Mission Winners, we do. Key on patterns that are easy to see. It increases the probabilities that they see it and that they will buy. Move on. Here we go. Home builders, nothing there. Leave it alone. Materials. How do you build houses with materials? There's nothing really going on there. Leave it alone. Now, that one doesn't look too bad. Communications. It's basing. It did gap up and reverse down, but it looks better than a lot of charts. There's no clean entry on it at this point in time, but there might be. And again, the weekly doesn't look too bad either. There you go. Let's continue onward. Energy, stay away. Financials. was looking good, but got ugly on Friday. As you can see, gapped up and reversed down. Be a little cautious with financials. Continue onwards. Industrials, stay away. Done. Technology doesn't look too bad. Do a compare and contrast. There's industrials dropping down, some red selling volume bars, okay, below the moving averages. Here's XLK. Oh, gee whiz, it's above the moving averages. That's good. In fact, it ran up and it faded off on Friday, but it still closed above the ADMA, which is the green moving average. And there are some tops across here. I'll draw this to help. And you don't have to get it to the penny, folks. Just get close. There you go. We're going to take out those tops, and we want to take those out with volume. But it tells us something else. XLK, technology. Maybe look into the technology sector too. There you go. We're about done. Consumer staples, stay away. Done. Utilities, kind of sloppy. Be cautious with that. Healthcare. Ooh, I think they need a shot. They need drugs. No, there's nothing good there. Be careful with healthcare. Consumer discretionary had some tops here, and it backed off just a bit. There's the simple tops. Went across there, had good volume here and here, but it did tail off. Needs to base up here and then push through these lines, okay? Just be careful with that. But it does tell us something. The consumer discretionary area, that was easy for me to say. The consumer discretionary area doesn't look too bad for potential opportunity. There you go. Metals and mining, kind of chopping around, be cautious there. Oil and gas, there's nothing good happening there. Leave it alone. And look at the weekly. For right now, just kind of be careful with it. That can change at any time, but right now there's nothing there. Retailing, lagging, be careful with it. Software doesn't look too bad, does it? Didn't close great on Friday, but it has been trending up. Maybe look at some software. There we go.
Hey everyone, this is Owen. I'm going to interrupt Pat for a moment to discuss something that's especially relevant as we head into next week, the bond market. There's been a lot of chatter lately about rising bond yields, and it's worth unpacking, especially in light of the FOMC's recent rate cuts. Now, if you're following bond yields closely, you've probably noticed they're climbing, even as the Fed has cut rates. Here's the thing. The bond market and the Fed's overnight rate don't always move in tandem. The Fed's rate cut is designed for the short end, affecting interbank lending. But when we're looking at bond yields, especially the 10-year and longer-term yields, we're actually seeing the market's long-term expectations for inflation, debt levels, and overall economic health. When bond prices fall and yields rise, it's a reflection of how investors are viewing the future, not just today. Now, what's pushing these yields higher? Part of it is inflation expectations. Higher yields signal that the market's not entirely convinced inflation is as tame as we might hope. If investors are expecting more inflation, they'll demand higher yields as a buffer. It's a bit of a tug-of-war. Rate cuts can create economic stimulus, which can drive up inflation expectations. And as those expectations rise, we see yields ticking higher. And beyond that, there's the issue of debt. When you've got $34 trillion in debt hanging over the economy, it adds a layer of complexity. As debt levels grow, investors may feel more uncertain and demand higher yields to compensate for that risk. By the way, if you're interested in diving even deeper into these kinds of market dynamics, don't miss our upcoming webinar, Building a Solid Trading Strategy from Scratch. We'll be live on YouTube on October 30th at 7 p.m. Central, 8 p.m. Eastern, sharing essential insights to help you refine your trading strategy. You can join us to level up your skills and connect with others in the community. So, as we head into next week, keep an eye on those bond yields and remember the broader implications for stocks, ETFs, and your portfolio as a whole. This bond market we're watching, it's the big ocean. While stocks are more like a drop in the water by comparison, yields rising in an environment where the Fed is cutting rates is one of those signals that there's a lot more going on under the surface. All right, let me hand it back over to Pat for the MAXLIST review.
That helps us. So let's look at the MAXLIST. Here's Apple. Weekly on the left, daily on the right. this is a perfect time to explain why I've developed this template and use it. You can say, well, I don't see anything here, but watch this. This is I love this. Don't do this with crayons. Just got to tell you. Just kidding. Go across these tops right here on the weekly. You look at the daily and you say, don't look like anything. But then you look at the weekly and say, hey, it looks like this is starting to form a cup with a handle. You're exactly right. Is it going to continue? We don't know, but it's the start and we'll be ready. So what do? I'm going to put I'll just put a price alert right there. You can say, why don't you put a price alert at the high of that bar, which corresponds with the high of this bar? Well, if it starts to push through here with volume, there's a strong possibility it's going to continue and push through here. By doing this, we could have a potential to get buy some at a lower price and then buy more pushing through the pivot. That's a great tactic I've used for decades and it works. But I have to temper it with this statement. If you buy early, because it hasn't officially broken up above this line on here, go smaller. Always control risk, and that'll help you. Let's continue onwards. Here we go. Amazon's a little choppier here on the weekly and the daily. Rallied up and then faded. Rallied up and it has a tail bar. Needs to push above these tops with volume, okay? Until it does, just err to the side of caution with Amazon. Baba, ain't nothing to do there, folks. Just don't overthink it. There's nothing there. Move on. BIDU, nothing there. Move on. When I do that, by the way, I don't want you to think, oh, Pat's being funny. No, I'm trying to drive home a point. If you have to look for it in the chart, it's probably not there. I taught that at IBD meetups. It's a fact. All right, don't force it. Let's move on. Google. Now, Google's forming a decent base across here. What's it need to do? Lift up through this line here, which is this line right here. Needs to take this out with volume. And I got to give you another lesson here too. You can say, well, it's a red bar there, Pat. So there's selling volume on that bar. If you notice, it closed just a hair below where it opened, right there. And it closed in the top half of its range on the daily. There's some support there. I'm not saying buy it now, but it looks like it did find some support. This week it will tell us. What will we do? We'll just watch and let price and volume guide us. And there could be an entry here, but the safe entry is up here. All right, taking out the line, taking out these tops on the weekly. So there's starting to show a little bit of improvement, but not a lot. Okay, on Google. Goldman Sachs was working great, lifted across here. Then it got sloppy, and then look what it did on Friday. Gaps up and reverses down. Okay, it's been met with some selling at this point, a little choppier. This is not a really clean entry, so be a little cautious with Goldman Sachs. Continue onwards. MasterCard lifted across these tops, okay, ran up, and then gave it right back. It just tells us be a little cautious. That's all. Continue onwards. Meta, going across this line right here. I'll draw this to help you. It's pretty simple too, folks. And just the high on this bar and the high on this bar. There's a cluster of highs right there. What does it need to do? Take out that top. By the way, yeah, I already knew about it. I've already set the alert, price alert. I'll drop it just a bit. And that's another good lesson for everybody. This is not a stop. It's an alert. Set your price alerts early. Don't set them at the pivot. Set them a little early so that if it does hit that pivot, you can look at the chart and say, oh, it's starting to pick up. Oh, look, it's getting closer to the real baseline where we buy. Oh, take it down to the 15 or 20 minute or the 10-minute chart. Take it down to, oh, there's volume coming into it. Without being frantic, you now have a good understanding of what the stock is doing, if there's strength or weakness, which gives you time then to get ready to buy some. There you go, or put a stop in. All right. It's just basing, nothing really clean right there. Another key lesson, fell on fairly heavy volume here. Went up on volume, but look at where it closed. It closed below where it opened. All right. So we need to see some power on Meta. Until then, just leave it alone. Microsoft, I like this base on Microsoft. Coming across here, I'll draw this line for you just to help you. It's fairly close across. We'll do it right there. Flat line there. Just needs to take this out, okay? It started to rally up, it pushed a little above, and then it faded off and closed in the bottom half of its range on a slight pickup in volume. What does that tell you? It tells us we need to get some power above that line. Until then, wait. Just wait. That's all. Alert set, let her go. Netflix starts to lift up. This had earnings that did that. And it's chopping around here a little bit. And even look what it did on Friday. It gapped up, it ran up, and then closed in the bottom fifth of its range, and it closed below where it opened. Okay, so not a lot of power there. At this point in time, it's just telling you, be a little cautious with Netflix as far as buying. Let it settle down. This is a great lesson, taught this for years. Wide and loose chart patterns, wide and loose price bars indicate high investor emotions. You don't want to be involved in stocks that have high investor emotions associated with it. There you go. And again, what it did on Friday, gapped up, ran up, and closed below where it opened, closed basically down from the open. Be a little cautious with Netflix at this point in time. There we go. NVIDIA, we own NVIDIA here and here, back here, these spots in here on the weekly, and it's trending. We're still in this, okay? It did tail off a little bit until it takes out these tops, and I'll draw a line for you to help you. And that's close enough right there. Until it takes that out with volume and a good market. Wait, need to share this with you also, and this is important. Mission winners. The M in mission stands for markets. Markets, they come first, okay? You want the market to be acting okay, and we don't impose our will on the markets. We let market action guide our actions. There we go. Let's continue onwards. Square, block, excuse me. I'm old school, aren't I? I remember that was square forever. Anyway, there was a downward sloping trend line. It's working okay here. Chopping around here, kind of loose bars here. Until this settles down, be a little cautious. There you go. On block. I got it right that time. How about that? Now, there is a potential setup here, bouncing off the ADMA. I'll take this lesson a little further. It needs to push through there, push through these tops with volume. Also note, on this bar, it fell on fairly heavy volume and closed in the bottom third of its range. We need to see some power on the way up. Price and volume on block, okay? Just wanted to share that. Let's move on. Tesla is owned, okay? Big part of it was from that gap up, and that was a catalyst to buy. We're in good shape. This is the daily. And then again, this is a great lesson for everybody. You can say, well, I don't really see much right here, Pat. But then you look at the weekly chart and go, oh, look at that. It's a big cup with a handle right here. Now, here's the risk. The handle is kind of loose, okay? Kind of loose in here. Tells you to be cautious. Be a little cautious with it if it triggers. But it is a weekly base. It is a weekly base. It's a little bit extended, as I stated on the daily. If you buy, just go a little smaller because it made a pretty good move to get to the pivot. There we go. Remember this. Good investing is not one size fits all. Good investing is not buy the same number of shares on every breakout. No, adjust accordingly. It will help you a lot. Go bigger on great setups. Go smaller on less reliable setups. There we are. Let's move on. Visa, there's nothing really there. It's got this cup and a handle formation here. It's got a bigger picture cup and a handle formation right here on the weekly. And I'll draw this to help you. Here you go. There you go. Cross those tops. And until that happens, just be cautious. All right, team, that's our weekly review. Hope it helps you get a clearer picture of where the market's headed and what stocks to keep an eye on. By the way, don't forget about our weekly top stocks to have on your watch list video coming out tomorrow at 1 p.m. Eastern. If you're curious about what we covered last week, you can find the link to that video in the top right corner. Remember, these watch list videos are just a small taste of what our VIP members get with the daily key list videos on missionwinners.com. So if you're serious about finding those super performance stocks, consider joining us. Now, I'm curious to hear from you. What are your thoughts on today's market review? Do you have any questions or concerns? Feel free to drop a comment below. I love hearing from you. Thanks for sticking around for the whole video. If you liked it, hit that like button and subscribe to our channel. And remember, stay sharp, keep learning, and keep finding those winners.